Did you know that despite a 3% drop in home prices last year, rents have gone up almost 5%? Let's dive into why now just might be the perfect time to start buying long-term rental properties, especially as the market shifts. Hello and welcome back to my channel, Brick by Brick Wealth. I'm your host, Casey Franchini, your long-term rental property real estate expert and coach, guiding you on how to be successful with your first rental property. Today, we're going to unpack what the real estate landscape is looking like so far in 2024. We're going to explore some up-to-date trends, dive into the risks, and spotlight some smart investment opportunities that you might not have considered. All right, well first, let me take a sip of my iced tea. Looking back at last year, the market was kind of mixed. We didn't see explosive growth, but we didn't see a huge crash either. Prices took a slight dip, but that's actually positive for us as investors. Properties at better prices, and just a bit of a correction rather than a crash. The slowdown mainly came from affordability and inflation issues. It was tougher for people to buy homes, and it is still tougher for people to buy homes. And naturally, that has cooled demand off just a bit. Now, when we dive into current market trends, we can't let ourselves get the shiny object syndrome. I know it's really tempting to fall for all those ads on Facebook and Instagram on those strategies to get rich quick tomorrow with no money and bad credit. You guys, that's just fake news. But there are some trends when it comes to long-term rental properties. Now, after the pandemic, we saw a huge shift moving towards single-family homes. You might remember that apartment complexes on the East Coast were getting vacated, people were leaving, and they were going to the suburbs because they wanted their own bedrooms, a backyard, and more space for their family. Living, eating, breathing, sleeping, everything was at home. They wanted a bigger space than a cramped apartment. Now that people are going back to work in the office, we're seeing multifamily properties get back on track. But single family still never missed a beat. And that is why I love single family rentals so much. Over the past year, despite the high interest rates and the unaffordability that we're facing, rental properties have still been in strong demand and rents have still been rising. According to NerdWallet, rents went up 3.4% from March of 2024 to March of 2023. And that's above the typical 3% increase that we see on average. Not only that, vacancy rate is going down. You might be surprised to know that the historical United States of America vacancy rate is about 7.29%. The past few months, it's been a 6% vacancy rate, and today, when I looked it up, it was 5.8% vacancy rate. More and more people are renting properties. Do you think this coincides with unaffordability in the housing market? People not being able to buy? I think so. These statistics help form my opinion that we are entering a renter nation. Housing affordability is going to continue to go through the roof, and there will be a high demand for rental properties moving forward into our future, which is great news for investors. Now, getting into strategy, I want to share a few strategies that have helped investors like me and my friends boost their portfolio. My specific strategy is that I focus on properties that cash flow and also appreciate. Properties that have extra rooms can easily be converted into bedrooms. Properties that have 1970s kitchens and avocado green tile in their bathrooms can easily be updated to produce higher cash flow, more desirability, and give you an added equity boost. Some other investors I know use the strategy called build to rent. They buy into brand new home developments at a low price with the intention to rent out those properties. New developments oftentimes see a bump in property values as they build roads and schools, parks, and more properties get filled up with buyers. As each new development phase is completed, prices of those developments usually go up. Another strategic move that some of my investor friends do is they invest in areas with specific demographics, a specific target market audience in mind. For example, homes in university towns, areas that have colleges, are a great place for student housing. You can do rent by the room, which will dramatically increase your cash flow, or provide furnished rentals for students on a school year basis. Another one, properties near major business centers are going to attract young professionals. So when you're buying long-term rental properties, it doesn't always have to be just a house in the suburb to attract families. When you're buying real estate, economic factors are just like the weather. It changes all the time and it's unpredictable. So whatever strategy you choose, be aware of the risk level, be aware of the factors that could change the property's value or your cash flow at any given time. Right now, for example, our weather is we're dealing with high interest rates. We're dealing with housing unaffordability and limited supply. This is slowing down buying, but it's also giving buyers an opportunity to get in at lower price points. Employment rates and economic policies also play a huge role in the weather of the real estate economy. When there's plenty of jobs and people are getting raises, that means more people can afford homes. We'll see an increase in buying. We'll see an increase in people moving up with their next level of rental property. All of these things are going to drive demand and prices up. So keep a close eye on those specific market indicators to help you determine which way our real estate economic weather is headed. But here's a warning. Be careful of the news you watch. Watching mainstream media, in my opinion, is the worst thing that you can do. Please check multiple sources before you form an opinion on what's happening with the economy, or on anything in life, really. Listen to sides on both sides of the aisle. And follow economists that you trust, especially ones that aren't always featured on mainstream media. A lot has happened for me in my 15 years of being in real estate, and I would love to know what things that you've done to weather the storm of all these economical changes that have happened during your lifetime. How have your investment strategies changed? I would love to know. If you could please put them in the comments below. We can all help each other out and figure out what direction and strategy we want to pursue next. Of all the shiny object strategies that are out there, one thing remains constant, and that is long-term rental properties. Long-term rentals are not only about the steady tenants, it's also about them being easier to handle. They provide amazing appreciation over time, just given inflation if you do literally nothing to your property. And they are recession resistant. There's also tax benefits like depreciation, writing off of expenses, like interest and repairs, which will significantly improve your investment's returns. Plus, they're a solid hedge against inflation. And if you've been awake in the past few years, inflation has gone through the roof. My Costco bill used to be $200 every time I went, and now it's averaging $400. As living costs rise, so do your rental rates. And not only that, you have your tenants paying down your loan. They're paying for the home insurance. They're paying for their property taxes. They're essentially paying for all the repairs, and you are left with money in your pocket as well as a higher net worth. This is how regular people like you and I are able to retire early and have a solid, stable income in retirement. It's through rental properties. Smart investments, keeping in mind you need cash flow and appreciation, watching the economic factors, and being careful to not over-leverage and catch that shiny object syndrome that's going to put you in the hole. Thank you so much for joining me today. Every single investment you make is a building block for your future. If you enjoyed our chat today, please do all the things. Smash that like button, hit subscribe, ring the bell, so you can be notified of when I put out super awesome, amazing videos just like this on how I can help you build your wealth in real estate safely and securely. Until next time, keep building that wealth brick by brick.